we can just start off. So for everyone watching this video, Stewart is a real tax lawyer from the US. He has the bar passed in the US. He's a real lawyer. I will also insert a picture somewhere here to, to show it. And I just wanted to invite him just so you guys can see what exactly it entails to have an LLC in the US and to answer some questions for non-US founders that have entities in the US. So just strong question to start off. Let's say, Stuart, let's say we have a European founder living in Spain or any other European country, doesn't really matter. It can be even UAE or whatever. Let's say they have tax residency in that country, let's say Spain, and they have a US LLC. Do they have to pay taxes in the US?
Hi, Teo. Thanks for inviting me to do this with you. I appreciate it. There's a lot of misinformation out there, and so I appreciate you giving me the opportunity to talk to everyone about how this works. So let me just kind of lay everything out here. I'll kind of give you an overview of how U.S. tax works in this area, and then we'll drill down to the specific question that you just asked. So in the situation you outlined, we have one individual who is the sole owner of a US LLC, and the LLC word for owner is member. It means the same thing as shareholder, but it's a special word for LLC. So whenever an LLC is a single member LLC, then by default, that LLC is a disregarded entity for US tax purposes. And what that means is that the LLC just simply does not exist in general for US tax purposes. So the LLC itself is not subject to US tax. Now, the LLC could elect to be a corporation for US tax purposes, in which case it would be subject to US tax. That is almost always a bad thing to do. Okay, so as long as the LLC has not elected to be a corporation, then it's a disregarded entity. The LLC itself is not subject to US tax. So all the activities of the LLC are treated for US tax purposes as activities of the owner of the LLC. Okay. All right. So the owner here is an individual. And so how US tax works here is that every single individual in the entire universe is either a US person or a non-resident alien. And so a US person is someone who meets any one of these three things. Either one, they're a US citizen, or two, they have a green card in the US, which is permanent resident status in the US, or three, they spend enough time in the US to pass the substantial presence test. Okay, and you got to spend a decent amount of time in the US like every year to do that. So as long as someone does not meet any of those three things, then they are a non-resident alien. Okay, and so let's go ahead and add to the facts, that this person you mentioned doesn't happen to also be like a US citizen as well, right? So this person is a non-resident alien. Okay, so how tax in the US applies to a non-resident alien is that there are two different tax systems that could apply. There's the passive investment system, and then there's the active business system. So your question doesn't really get at the passive investment system, but let me just mention it, and then we'll know everything. Okay, so the passive investment system, how that works is if a non-resident alien owns a U.S. investment asset and then is paid current income on that asset, the U.S. person who pays that current income is required to withhold U.S. tax at 30%. Okay, so that's the general rule. There are lots of exceptions, and this can get complicated. But like the easiest example would be like if this person you're talking about, if they decide to invest in SpaceX or something, or Microsoft or Tesla or something, it's stock of a U.S. corporation, and then the U.S. corporation pays dividends to them. Well, the U.S. corporation is going to withhold U.S. tax on those dividends at 30%, or a lower rate if a tax treaty applies. Okay, so that's the passive investment system in a nutshell. So more pertinently to your question is the active business system. Okay, the whole key here is that the non-resident alien will be subject to U.S. tax only if there's some human in the U.S. who's performing the business. Okay, so the key, even more, I guess, broadly, the key is where are the people who are running the business? Okay, and if the answer is they're not in the U.S., well, then there's no U.S. tax required to be paid. So the key phrase here is that a non-resident alien is subject to U.S. tax on business income only if the non-resident alien is engaged in trade or business within the United States. And that whole phrase is like a defined term. And the short way to say it is ETBUS, ETBUS. Okay. So a non-resident alien is ETBUS only if there's some human on the ground in the US who's working for the business. So the three kind of common situations for who that human is one, it could be the non-resident alien themselves, right? So if this owner we're talking about, if they're going to the US and working, then that would make them ETBUS. Second would be like an employee or like a close independent contractor who works for the non-resident alien. So this would be a human who wakes up in the morning in the United States every day, and their job is to make this non-resident alien owner happy, do what they're told. And, so that's the second situation. Third situation is like if the non-resident alien has a partner in the US, then that would and the partner works in the business. So the partner's not just like a silent, money partner, and that would make the non-resident alien. So
Just a question here,
yeah.
because you said if the non-resident owner works in the US, what does work mean? Like if they go for a vacation in the US for 2 weeks to just like a business event or something, like a conference, let's say, does that count as working in the US if they're just visiting?
Yep. Yeah, that's a good clarification. This sort of thing comes up all the time because, a lot of times people, will go to the US to do things like that. So yeah, this is nice and fuzzy, there's no like extremely bright lines here, but like, I mean, more particularly on the definition of ETBUS is that to be ETBUS, the non-resident alien would need to have activity on the ground in the US on a regular and continuous basis,
Yeah.
right? So if the facts are that in a 20-year period, they go to the US one time for 2 weeks, it's like, well, that doesn't sound very regular or continuous, right? If the facts are they go to the US for only 2 weeks every year, and really they're visiting grandma, or they're just going skiing, or they're going to like a conference or something, and they happen to open up their laptop and answer some emails from clients or something like that, well, that sounds fine to me. Like that's not, that's not like doing the work of the business, just
Yeah.
answering a few emergency emails, so
Yeah.
so things like that I think are fine.
It's not like they're going to their warehouse in the US, because already if they
Yeah.
had a warehouse, they would be liable in the US for taxes. Like
No. So here's a misconception. I mean, right. So that's where people get this whole ETBUS thing wrong, is they add stuff to it, right? So the only thing that makes a non-resident alien ETBUS is having their own people on the ground in the US, or going to the US themselves, or having a partner in the US. It's all about where are the people doing the work. So they can so basically everything else could be in the US. So like let's say someone has an e-commerce brand, they sell products on Amazon, their own Shopify website, and all of the customers are US. Well, that's fine. All the customers can be US. Let's say they store products in an Amazon warehouse. Well, that's fine. Or let's say they store products in a third-party logistics company. Well, that's fine. It's okay to have products in the US. That doesn't make them subject to US federal income tax.
okay,
Now,
so
what you might be thinking of is sales tax is sort of a separate thing. So,
no, I was
oh,
thinking like if they had like a, okay, yeah, if it's a third party warehouse, I can see how maybe that's just like a service they use. But if they had their own warehouse, right? Like,
yeah, you're totally right. So yeah, okay, so maybe I should have clarified that. But yeah, if it's a third-party warehouse, then yeah, that's when there's no problem. But
yeah,
I've had situations where someone is selling like products that need like specialized packaging, or like are very delicate to handle, and so they want to rent some space, hire their own employees. And I say, okay, well, you can do that. It's just that now you're subject to US tax,
yeah,
And I guess one word about that, I try to be careful here about not having like the tail wag the dog, in that if a person wants to arrange their life in such a way that they are subject to US tax, well, you're perfectly free to do that. You can do that. And it happens, non-US people every year decide to enter the US market in a way that makes them subject to US tax, right? And I've seen that happen, where people say, well, no, the nature of our business is that we want to have an office in the US with our own people there running it. And I know, so, okay, well, you got to pay US tax, right? So anyway, so I try not to prejudice
okay,
the conversation by like treating that as the end of the entire world, because it's not. It's a valid thing that
for sure.
but there are a lot of people who would, think it's the end of the world. So, but anyway, I just wanted to, but yeah, you're right. I mean, having your own warehouse, like with your own people there, that's, that is having your own people on the ground in the US.
Yeah,
And
okay,
so yeah, absolutely.
okay. But that's actually great info, because even I thought, that you had to pay if you had a warehouse, or I don't know, like my partner, he had a business and he was using a third party warehouse, but he was paying taxes and he's not a person, and he didn't have employees or anything there. So now I have to tell him that paid for nothing. But
Yeah, exactly. I mean, And he can get a refund too. So I don't know when that was. We'd have to talk about the specific
Yeah.
situation. But I've gotten refunds for clients in that situation where you file an amended return with the IRS saying, hey, I'm amending my return to basically unfile the return because I now realize I didn't have to do that. So please send me a refund. And so that's a possible thing. Yeah, I
Okay.
mean, this whole thing is kind of frustrating to me. Yeah, this whole thing is kind of frustrating to me because for some reason there are a lot of accountants who don't understand this, and I think the reason is that like the statutory path is very clear where like step one is that a non-resident alien is subject to US tax only if they are engaged in trade or business within the United States. Step two is if they are ETBUS, they're subject to US tax on their effectively connected income. Step three is that in general, all US source income is effectively connected income. And then finally, if you're selling products into the US, it's almost always the case that creates US source income. So a lot of accountants get this wrong, I think, because the whole ETBUS thing is really fuzzy because it's all these rules we're talking about are in case law. They're in the opinions of courts. And accountants don't do that. That's what lawyers do. But the rules about what is U.S. source income, those are very simple rules. They're written in the Internal Revenue Code, right? So accountants kind of get it wrong by saying they kind of look at I guess they look at the words engaged in trade or business within the United States. And they go, well, you're selling products to people, so that's a business, right? And the people that you sell it to are in the U.S. So I guess so I think they just sort of blow past it because they don't understand that, and then they get to the easy stuff they do understand. So anyway, so that's why this is sort of like, and it's funny because like way back when, a few years ago, I used to only, my only clients were Americans who lived outside the U.S. And but
Yeah.
one thing I do for these clients is it's often the case that operating their business through a non-U.S. corporation is beneficial for U.S. tax purposes for them because they're still subject to U.S. tax. And so I just went looking around on the internet just to kind of see what other people are saying about the question of whether that non-U.S. corporation is subject to U.S. tax. I just want to make sure that see what my clients might be reading from other people. And I found a bunch of nonsense from from accountants, saying that in that situation, a non-U.S. corporation like selling products into the U.S. could be subject to U.S. tax. So I wrote a post on my like list of articles on my website that was just sort of a heads up, like, hey, by the way, non-U.S. people, you don't have to pay U.S. tax as long as you don't have your own people on the ground. And I had no, way. I was just trying to like help out and counter all this nonsense out there. And so then it eventually dawned on me that, well, non-U.S. people, often want to set up an LLC in the U.S. and I can sure do that. And so now more than like half of what I do for a living is like setting up LLCs in the U.S. for non-U.S. people and helping them report it, getting refunds for people like you mentioned earlier, and like doing consultations and helping non-U.S. people. And there are more complex situations with non-U.S. people as well. Like some of them do want to enter the U.S. market.
Yeah.
Some of them want to move to the U.S. for a while, so we do like pre-immigration planning. Some of them have been in the U.S. and then want to leave the U.S. So that takes some planning. So anyway, so a lot of what I do now is helping non-U.S. people.
Yeah, that's great because there's actually because you mentioned earlier, and I actually wanted to ask you, why are there so many CPAs doing taxes and like lawyers when you are looking for like a tax lawyer, especially for non-US founders, it's so hard to find them.
Yeah. I mean, I guess mainly it's like the venue in which lawyers work. So I used to be a lawyer at like big law firms in the U.S. And whenever you're a lawyer at a big law firm, you can't just book a consultation with somebody. Like you have to that you have to clear conflicts, like make sure that client isn't adverse to one of your other clients. Like it's a whole big mess, right? So my situation's different, and so that's this is sort of something that's kind of frustrating to me is like people will book a call with me, but they have read all this nonsense from accountants that say they have to pay U.S. tax, and so it looks like it might look like to them that I'm the weird one, like I'm the outlier, right? But I promise, if you were to go talk to U.S. tax attorney, if you go to the last law firm I was at, or any law firm, any big law firm in the U.S., and you walk down and start knocking on doors on the hall, and you explain the facts that like we just talked about, every tax attorney would say exactly what I said. So it might look on the internet like I'm the outlier because of all these Yahoo accountants posting stuff, but no, it's that's not how it works. So
Yeah, that's crazy. But why are there so many like why aren't there more tax lawyers doing this tax setup? Like whenever I look for someone to handle the tax filing and everything, especially for non-US founders, I only find CPAs.
okay, yeah, I don't know. I guess people just like what they like, and I mean, I like this, so I don't know. I guess that's a good question. I guess I'm glad that they're not. So
It's good. Yeah, but there are
yeah.
so few. actual tax lawyers, because like in my head, like when I got these questions also from the people that I was talking to, and like even for myself, like I don't want a CPA to tell me like if IRS comes on me, like I want a lawyer. Wondering, like why are there so many CPAs and not more tax lawyers?
Let's not give those other tax lawyers any ideas, Teo. Like, let's leave. They can do their own thing, and I'll keep doing this. So,
Okay, I can cut this up if you don't want.
no, I'm joking. It's fine. It's fine.
No, but that's really like it's definitely new for me. Like even the whole thing, with the people and everything. That even if you have a warehouse, but it's a third party thing, like I'm mind blown. So that's
Now,
really
let me mention, kind of going back to the fact pattern that you talked about a minute ago. Like, let me mention one other
yeah.
situation that comes up. Okay, so in what you were talking about, we had one non-resident alien individual who is the sole member of a US LLC. Well, sometimes it's the case that we have two individuals who want to partner up in a business, right? And so then, like, let's say they're each 50% owners of a US LLC. So that situation is slightly different in that, but only for reporting purposes. Okay, so actually, and I guess more broadly, this is something that we should talk about for even the first situation. So let me go back. So in the first situation where an LLC has a single member, the LLC needs to file a form with the IRS each year called IRS Form 5472.
Yeah.
Okay, 5472. So in the situation I just mentioned, where the LLC has more than one member, the form it needs to file every year is different. It's a partnership tax return. It's called IRS Form 1065, so 1065. And also, the situation is kind of slightly different because the LLC itself is a U.S. person. Okay, it's still not subject to U.S. tax because a partnership is not subject to U.S. tax. It just sends the income up to the partners, and then the partners deal with it based on their specific circumstances. And when the partners are non-resident aliens who are not ETBUS, then they're not subject to U.S. tax. But it kind of works different for certain purposes. Like, for example, whenever I'm talking with a non-resident alien business founder who's going to sell products on Amazon, I think it works better for Amazon purposes if the LLC is a partnership for US tax purposes. And the reason for that is that Amazon has this field in the Seller Central dashboard called legal business name. And for some reason, which I think is not a good reason, they go with the tax treatment instead of the legal treatment. So if you open an Amazon account in the name of an LLC, and the LLC is a single member LLC, well, that member is the legal business name on the Amazon account. And that causes things to get kind of screwed up. Like, one example is product liability insurance. So Amazon requires people to have product liability insurance in certain situations.
Yeah.
And my understanding from my clients is that that's really cheap and easy to get in the US. But if you get it in the US, the LLC is the insured party. And so if the LLC is the insured party, but the legal business name on the Amazon account is the owner of the LLC, well, then Amazon looks at that, applies zero brain cells to it, right? And says, oh, there is no insurance here, right? So anyway, so in that situation, I like it to be a partnership. And even if there's just one person who owns the business, I say, all right, well, we just need someone else to own 1%. Now, if they're married, that's easy. Or whatever, we just need one person, like your brother, your dog, your whatever you got, So anyway, I just want to mention this separate kind of situation of having a partnership, and it all works the same from a substantive tax perspective. The ETBUS analysis is all the same, but what's different is the reporting of it.
Yeah. Okay. Yeah. No, I know that like you have to still report that form, but yeah, and like I think you can just have like a accountant even do that, right? You don't need a lawyer for that or anything.
Yeah. I mean, but this is something I do help with. So I can help with the reporting for LLCs in either situation, and then also just like provide advice year round about whatever might be coming, changing in the business or whatever. So
Yeah. Okay. What happens? Like, this is also a personal fear, but I guess a lot of people have it in their head. What happens? Like, let's say you get a tax, like with CPA, I already, I already see it. I'm like, I don't know if I want a CPA, but let's say you get a tax lawyer to do your, like, your tax situation, your tax filing, everything. How do you make sure that you won't have to suffer any consequences? Like, what if they make a mistake? Like, and as far as I understand, like it's still the person that's liable for the mistake, right? So not the lawyer.
right.
So like, how do you make sure that you are protected and you won't have issues?
Yeah, so you're totally right that that's how it works. It's like, whenever you're dealing with a government, it's your responsibility to do things correctly. And if you hire someone to help you, well, it's still your responsibility. But in general, if there are penalties associated with something, then you can get out of those penalties by having reasonable cause for whatever you did that caused the penalty. And so one element that establishes reasonable cause is I hired a professional to do it, and the professional did it incorrectly. And so it absolutely, helps with the IRS, I guess, to have a professional. And then also, I mean, in these situations, it just doesn't matter. I mean, that's kind of one nice thing I like about working for non-US people versus like US people is that, like, let's say the partnership tax return we were talking about earlier, the IRS form 1065. Well, it's got to have an income statement and a balance sheet on there, right? So you got the client's got to do some accounting and send that to me. Well, what if that's wrong? Well, it doesn't matter that much because the LLC is not subject to US tax. The partners are not subject to US tax. And so like, let's say the income statement says they made $1 billion a year when actually they lost $1 million that year. Well, it just doesn't matter, right? Because like there's no consequences to it, right? And so it's you've got to it is pretty hard to screw this stuff up. Like you've got to like almost try, like so. I mean, what the situation I see more often is people like not hiring someone and not getting the proper help, and then that's when things get screwed up. So, for example, we talked about the IRS form 5472 that has to be filed by an LLC. Let me refine that a little bit. Technically, it only needs to be filed by an LLC if there's any movement of assets between the LLC and the owner for a taxable year. Okay, so if there's not, like if the LLC is kind of dormant, then it doesn't need to be filed by the LLC.
Yeah.
But if it's not filed, then there's a penalty. The IRS could assess a $25,000 penalty for
Yeah.
not filing it. You can get out of that penalty by using reasonable cause, like I mentioned earlier. So
Okay. So basically, or let's say, yeah, I guess my worry would be that you get a lawyer and they tell you, oh, you're not subject to US tax. And then for some reason you are, So then the US comes and you're like, bro, you have to pay. So, like, what do you do then? It's like, is there reasonable cause there, or do you just have to pay up?
Well, every situation is different, so it's kind of hard to talk
Sure.
about some blanket thing. But I mean, that would be highly, highly, highly unusual. And I mean, let me mention one thing too. Like every once in a while, one of my clients will get a letter from the IRS saying, "Where's your tax return?" And then they go, "What in the world is this?" And they send it to me. Well, we send a letter back to the IRS explaining the situation. So what happens a lot is like let's say someone sells on Amazon. Well, Amazon sends a form to the client and to the IRS. It's called IRS Form 1099-K, which shows that Amazon has processed payments on behalf of the client. And so every once in a while, usually when the numbers are pretty big, the IRS will say, "Hey, we got a form indicating that you might have income, but where's your tax return?" And so then we just write a letter to the IRS. Just basically, that letter is like what this call in word, on paper. Basically, it just explains the whole situation. And I've never had the IRS come back after that. So yeah, so I guess like basically what I'm saying is it's not the end of the world if the IRS says that maybe because the IRS is just relying on some sort of
Yeah.
reporting that they got, and also I've worked on this issue in all sorts of, for years. I mean, since this is a common, like this has been the law forever. And so I've worked on this issue for all almost 25 years of being a lawyer. And I've seen it in lots of different scenarios. And so like, this is not a controversial opinion. It's not complicated. Sometimes the facts can make it complicated. Like if someone has a person on the ground in the US and we're trying to decide whether that person is
Yeah.
independent or is the person of the non-US person, so that sometimes the facts get complicated, but the law, I mean, like this is how it works. There's no just like generalized danger or anything like that.
Yeah. Okay, what if the person has a business in UAE, let's say in Dubai, and they
Mm.
have, this is just like a side note, just to make sure like how it works, and they have a person, like an employee in the US, but they don't have any entity, they don't have any LLC or anything in the US. Are they subject to tax?
Okay, wait. So we have a non-resident alien individual lives in Dubai,
Yeah,
and that individual, there's no U.S. entity, but they have an employee in the U.S.
yeah, or multiple employees, let's say. They have
Yeah,
like,
yeah, yeah. Well, yeah. So remember, so everything we talked about before just exactly applies here because remember the LLC is in general the LLC is a disregarded entity whenever it has a single owner. So the only thing you've changed now about the facts from a U.S. tax perspective is just you've added the employees, right? So everything we talked about earlier applies here. So yeah, in that situation, now I guess like so a non-resident alien is ETBUS only if they have their own people on the ground in the U.S. on a regular and continuous basis who do something substantial to further the business. Okay. So I've kind of just now added that last part. I didn't really say it before because it
Yeah,
wasn't
because it
relevant,
didn't
but
matter.
now it might be. And so I guess there's a little window of hope here that the person might not be subject to U.S. tax if the people are only like doing bookkeeping or like kind of doing administrative and
Yeah.
ministerial stuff. But that seems kind of like, that would be seems like sort of rare, but like so in general though, I mean, if assuming these people are actual employees and they are doing something on a regular and continuous basis and it's substantial, then yeah, absolutely, the non-U.S. person needs to pay U.S. tax. Like, well, I would tell them, welcome to the U.S. tax system, right? And it's kind of funny because I live in Belize, here in Central America, also like in the Caribbean. It's sort of like it's culturally it's like a Caribbean island, but we're on the mainland of Central America. And so sometimes in situations like this, I tell people, well, look, if you're looking for a native English speaker who is in a U.S. time zone, we got a lot of them here in Belize and also all around the Caribbean. So like, do you really have to hire them in the U.S.? And so, but yeah, but also like,
That's good to
yeah. But like I was saying earlier, maybe this person understands that and they're willing to pay.
yeah.
Also, I guess to say a little bit more about this. Now, okay, in your situation, you're saying this person is in the UAE, so they're not paying general income tax on all their income. They're only paying like the 9% corporate tax in the UAE. And so paying US tax would be an additional tax. Okay. Well, let's change your facts a little bit and like let's make it more like your first person who was like in Spain, right?
Yeah.
So if someone, let's just say someone's in Spain and they are just a normal tax resident of Spain, so they are just paying Spanish tax, right? Well, in that situation, becoming subject to US federal income tax is not really the end of the world, because how it would work is they would pay U.S. income tax on at least some of their income, and then they would claim a foreign tax credit on their Spanish tax return. And so basically, by having their own people in the U.S., all it does is kind of increase their administrative burden. So now they need to file a U.S. tax return. They need to file probably employment-related taxes for the people, and there's some rigmarole and like paperwork that they need to take care of. But their overall tax burden doesn't decrease, and Spanish, I mean, it doesn't increase. Sorry, Spanish tax. My working assumption is that it's generally higher than U.S. tax, and so they've got to pay Spanish tax on their worldwide income. And so all they're doing is like instead of paying Spanish tax of $100,000 a year, they pay U.S. tax of $30,000 and then
Yeah.
Spanish tax of 70,000, right? So
Yeah. Because but I think that only works if the countries have double tax treaty, right? Like if
well, no, not necessarily. I mean, if the U.S. and that country have a double tax treaty, then it will it will be the case that that country has a foreign tax credit, but the country still could have a foreign tax credit even if there's no treaty.
yeah.
So yeah.
Okay, that makes a lot of sense. Okay.
But also that in this situation, the person would need to talk with a Spanish tax lawyer to make sure that their
Yeah.
legal structure in the U.S. works properly, because having an LLC might be a problem. Like it might need to be a different type of legal entity. So anyway, there's always there's
Yeah, for
there's
sure. You have
complications.
on both sides when you have multiple countries in play,
Yeah.
for sure. Okay, so let's say all of this has been so helpful so far, it makes so much sense. But I just wanted to let's say let's take a business owner, okay, that has an existing business in Europe and they want to open an LLC to be able to use the US credit cards, right? They just want the LLC to open bank accounts, to run maybe their ad spend or any spend that they can put on a card. They want to run it through the LLC, right? But they have a business in Europe, let's say, okay, they could have e-commerce, online business, whatever. What would be the best way to set it up? I know you can either somehow register it either as a branch, or you could do it as that it's your media company and you just pay every month from your European company to the US one for the advertising cost or whatever. What would be the best, most compliant setup, or how should they approach it if they just want to run their, let's say, ad spend through the US LLC?
Yeah. So, like you said, there are different ways to do it. I mean, I guess most commonly what I see is people needing to use a US LLC to run their entire business through, right? So, like if they have an e-commerce brand, then they create a US LLC, and that LLC is the entity that is selling products to the US, right? So the situation you presented is a little different in that they're already established somewhere in Europe and they have a European entity. So in that situation, if literally the only reason for having a US LLC is to get US credit cards, then yeah, I guess there's no reason to like run your entire business through that LLC now. And that could cause issues in whatever, European country that they're in. And
Exactly.
so yeah, they could just specify, like you said, like it's sort of like the financing arm of the empire or something, that it solely exists to help the European company move money around. And so in that situation, it's not like doing the whatever the main business is of the European company. And so that's perfectly fine, And like I said, whenever an LLC is a single member LLC, it just doesn't exist for U.S. tax purposes. And so that's what's so great about this is that set it up however you want to, because from a U.S. tax perspective, it's doing nothing. It's all everything is whatever it's doing is being done by the European company. So it's all very flexible.
Yeah, exactly. And they can, like, it would be completely clean that they would just wire the exact amount that they spend on ads, let's say, right? So they
Yeah, yeah.
have like a US ad account and they are paying with the credit card, and at the end of the month or every 2 weeks they just wire money from their European company to just pay off the ad spend, right? That they pay with the credit card. So like,
And this is all stuff I help with, so I can help from the beginning, setting up the LLC and making sure it's reported properly and getting an EIN for the LLC and answering all these questions for them and more specific questions if things change in the US and all that. So I've got a whole package to do all this for a flat annual fee.
I think I pretty much covered all the questions that I had.
Awesome.
Thank you so
Well,
much.
thanks a lot, Teo. Yeah, this is fun.
Thank you so much. Guys, if you want to be using Stewart's services for your tax filing or anything tax related for non US founders, you can reach him at the info in the description that I will leave there. And yeah, thank you so much, Stewart.
Thank you. Take care. Talk to you later.